Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today is Saturday afternoon time. Thank you for your patience. I do have a quick announcement. Next weekend, next Friday, there will be no market update. I am traveling next weekend, so there will be no market update. So next weekend, which is October 18, 19, 20, right? 18, 19, 20 weekend, no market update. We'll skip that and we'll resume October 24th. Is that, hold on a second, let me just double check my schedule. 24th. Yeah, so we'll resume October 25th. October 25th. So next weekend, next Friday, no market update as I will be traveling. So as usual, let's start with Spider, Qs, Diamond, Russell, Banks, and the Semi. So we did see a gap up on Friday. So what we'll do that, and I want to put in levels here. I'm going to actually make this video very simple. As of today, I want to give a minor term trend, and I want to categorize it as bullish today. Now that we are staying above these moving averages, right? The sentiment, the trend, as of now, with the tangible data at hand, I'm not sure if we're going to come down on Monday or Tuesday, but as of now, with the tangible data that I see, which is this right here, because it's been bearish in the minor term and then was neutral here, and then with the gap up, we're still staying above these moving averages. The short-term moving averages, I want to categorize it as bullish today. And last time we saw something similar right here. We saw some up and down shenanigan, but once we get up, we held that level. We did see, about a week of bullish run before pulling back. And another thing I also want to talk about is I think if we can able to sustain this gap up, if the gap does not get filled, if this gap sustains, if that gap stays open, there's a little down gap right here. Let's actually put that in. There's a little down gap, right? There's a down gap. If we can sustain this gap, the 296, 293 gap right here, not get it filled, I believe we're going for 300 and above on the next leg higher. Because I know here we saw that, because people are looking at this like pretty much last 5 months. What people are looking at is this came down, got up, came down, got up, came down, got up. People think we're going to continue to do it. But I think this time around, if this gap remains open, it has to remain open, I think there's a chance, higher probability that this thing is ready to finally break out above 300, 302 for 305 and beyond, right? So here's what I'm going to say. What I don't want to see as a bull, if you're a bear, right, you want to see this thing gapping down, right? If you're a short-term bear or something like that, you want to see this thing gapping. If this thing gaps down from here to here, that's not the end for the bulls, but it's going to make things extremely hectic, probably going into the remainder of this month. We do have a gap here, so let's do that. I know there's a wick. There's no wick there. If you go to like hourly chart, you see there's a gap here. So what I'm gonna do, I'm gonna do this. Put that there, and then put this here. So here's what could happen. If this thing gaps down, it's probably going to come down and fill this gap, and then we'll have to reassess the situation at that time. And if this thing gaps down 292, right, on Monday, and with the market climate that we've been in last several months, it's capable of doing it. Capable of doing some shenanigan like that. But if we want this momentum to continue, it would have been the best if we don't fill this gap and keep it clean. But here's the other scenario that's still going to be bullish, meaning if this thing comes down, fill the half of this gap and kind of retest that support, that's still bullish if it goes back up. If it comes, and so that's okay, filling half of a gap, that's fine, still bullish. If still come down and fill entirety of the gap, still bullish, because once the gap gets filled, it's going to act as pretty strong support. Bulls don't want to see this thing gapping down entirety of it. Best scenario will be another gap up on Monday and then continue higher. Or we kind of come down, fizzle a little bit like this, you know what I'm saying? Like little down like that, and then potentially move higher. So filling like half of the gap, that's fine. Filling entirety gap, that's still fine. Only way bears going to really make things hectic for the bulls will be gapping it down, turn this into an shooting star, evening star, island top reversal. If we see that, bear's gonna come down, fill this gap, even trying to break below this uptrend support to create more fear, more panic. But let's not get too ahead of ourselves, you know, let's not be like, oh my God, what if that happens, Kate? Let's not be fearful of all this. We'll revisit that. I mean, I'll tweet things out, maybe write an article or something like that if we do, you know, I'll tweet things out, charts and things, you know, if you can follow me at 2K Kim on Twitter, and I'll explain things if we do see a gap down. And I can't completely rule that out just because we've been in, you know, such a choppy up and down shenanigan market. You know, I can't rule that out. So just keep that in mind. Everybody's talking about this tail, right? But you know what the market does though? Market is always going to make you guess every day, right? Just because it seemed bearish to you, it always mean it's going to be bearish. How did it look? I mean, how did it look? Here, let's go here. How did it look to you on, this was it, 8th? That was what? Tuesday. How did that look? Oh, that looked bearish. That looked bearish. Because with a big move, we're already in a downtrend. In the minor term, we see a shooting star candle. This thing gaps down after a big move and flushes through. Not only that, it filled this gap right here. We fill that gap and it just flushes right through. There is completely shaved. There's no dip buying activities there. I mean, it looked like bears are completely have fumbled this, or bulls completely lost this move, and this thing is ready for just massive down and just flushing it through. I wouldn't be surprised. So many bears going long or going short here. Just extremely put buying activities, waiting for this massive head and shoulder. Oh my goodness, left shoulder, head, right shoulder. Here is the neckline. Look at this gap down and the flush. This thing is ready for some shenanigan to 270. Boom, right? Boom. And the next day, oh, what happened? What the hell, dude? No, man. Bears, right? Nah, bro. Nah, bro. Oh, no. Just fill the gap. Oh, we just filled the gap. Yeah, we're still bearish. Yep. Yeah, we're still going. I'm shooting more. Yeah, that thing is the head and shoulder. Oh my God, that head and shoulder is, we're crashing. But this is 2008 all over again. It's written everywhere. I was watching, you know, these gurus on YouTube, man. They're all saying that, you know, this resembles 1929, 1939. Ray Dalio's been saying this. Man, yeah, man, I'm up to date, bro. I watch CNBC and stuff. I'm smart, so this thing is gonna tank. Well, we gapped up and we had a big move throughout the day on Friday. And then all the bears who thought the crash was coming probably flipped bullish here. And then that's probably what that was. Just kind of punishing the chasers. What a story, right? You see how quickly the sentiment of the market can change. So this is why I always emphasize not putting too much weight on these short-term daily movements. Trying to see if you can understand bigger picture. Qs, same thing. It's the same story, but we're above the moving average, right? So you can hold that gap on Monday. Same thing here. This is Diamond, Dow Jones, right? We got that gap there. Let's see, we say if we can hold that gap. Bulls don't want to see a gapping down. Bears want to see this in gap. That would be the best case scenario for bear. Gapping down, making into an island top, right? It comes on fill a little bit, fine. It comes on fill entirely, fine. I don't want to see completely gapping it down. Russell 2000. I think there's still a gap in Russell. Yeah, there's a gap. I don't know. My chart do that sometimes. So there's a gap there. Right there. There. Same story. XLF. So I've been saying this, every time when there's a big bullish day, you will find that Russell and the XLF leading the market. That's how slowly these guys are going to catch up. So every time there's a big moves, you'll find that, or there will be some days where you come on the market, like Russell bangs up like 1.5%, where the S&P is up like 0.3%. Like you're gonna start to see those things happening. Trust me, like they're gonna start to play a catch up because they're nowhere near all-time highs. Like Russell, no, Nasdaq, the S&P, the Diamond, they're all Dow Jones, they're all near all-time highs. But the Russell 2000 and the banks, they're not near all-time high. Same thing, same scenario here on the XLF as well. The same narrative, right? The gap. I actually have to say that semis look the most bullish in the long term. You know, I know what some of these guys can say. Well, that's a wedge, okay? It's bearish wedge. It's gonna do this and it's gonna do that, okay? Yeah, but you're saying the same thing over here. You thought this was a crash. You thought the bear market is gonna happen. You thought that's head and shoulder, and this is gonna do that, and it really didn't do that. Wedges are kind of dumb because it might look like it's gonna do that and then goes right back up like that. Or sometimes it looks like it's gonna break out, comes right back in, and then goes right back up. So I never really put any weight into wedges. Right? You put any weight into wedges, you get a wedge. So don't be that guy who gets wedges, right? Yeah, so that's pretty simple, right? The gap. Let's see if we can hold that gap. Feeling a little bit of gap, fine. Feeling entire gap, fine. We just don't want to see gap getting filled or gapping it down in entirety on Monday or Tuesday or anytime next week. But if we do see this thing gapping down to 293 and we see an island top, it's not gonna be end of the world for the bulls, but will be hectic for the remainder of this month. And prepare, if we do see that, prepare this thing probably could attempt to break below it. But if we can hold this, prepare for 300 or higher. So I think next week will be interesting. We're kind of trading at a key level, and this gap up really helped this momentum to shift. For now, we need to see if we can hold or not. So how it behaves early next week will really, we'll have a good idea where the market is going to go remainder of this month. You can follow me at 2K Kim. I'll tweet things out about the market, and no market update video next weekend. We'll resume weekend after, which is October 25th. You guys have a wonderful weekend. Good luck trading next week.